Have you ever pondered the distinction between private equity and venture capital? These two forms of investment both involve channeling resources into private companies, with distinct differences that set them apart. Picture private equity as the seasoned investor who identifies more established companies that are ripe for growth or operational enhancement. These firms may acquire a controlling stake in the company, partnering with its management to implement changes that amplify its value. The sums involved in private equity are typically larger, often reaching into hundreds of millions or even billions of dollars. Venture capital, on the other hand, can be likened to the risk-taking entrepreneur. These firms invest in early-stage companies teeming with high growth potential. They may fund companies that are still developing their ideas or have just launched their products or services. The investment amounts here are generally smaller, often tallying in the millions of dollars. Now, let's distill these differences into key points. Private equity invests at the stage of established companies, sinking larger sums of money and often taking a controlling stake. They typically have an investment horizon of 3 to 7 years, with lower risk and consequently lower potential returns. Venture capital, conversely, invests in early-stage companies with smaller sums of money. They usually take a minority stake and have a similar investment horizon of 3 to 7 years. However, they bear higher risk with the potential for higher returns. Bear in mind, though, that the line between private equity and venture capital isn't rigid. Some private equity firms might invest in early-stage companies, while some venture capital firms might invest in more mature companies. Regardless, the general distinctions we've outlined will aid in distinguishing between the two investment types. So, which type of investment suits you best? That depends on your investment objectives and risk tolerance. If stability and lower risk appeal to you, private equity might be your go-to. But if you're game for higher risk with the potential for greater returns, venture capital could be your best bet. Remember, both private equity and venture capital investments are typically long-term. Be ready to commit your resources for several years. And of course, before you dive into either private equity or venture capital, ensure you do your due diligence and consult with a qualified investment advisor.